Hello, everyone. My name is Brian Van Hook, and I'm Regional Director of Florida Small Business Development Center at FIU. Thank you for joining us today for the second in a series of webinars focused on business information, business resources, and business assistance available for businesses impacted by COVID-19. This particular webinar runs approximately 20 minutes in length, and it's focused on SBA disaster loans. So let's get into the presentation. A little bit about who's this guy talking to you. My name is Brian Van Hook. Again, I have 15 years of disaster recovery business continuity experience. I worked on Hurricane Katrina, Hurricane Sandy, Midwest tornadoes, Zika. So worked on a few disasters. I'm part of the Florida SBDC network. The SBDC network is funded in part through a cooperative agreement with the U.S. Small Business Administration. So we are a SBA resource partner. Nationwide, our center is part of the America's SBDC, which is 1,300 SBDCs around the country. And here in Florida, the Florida SBDC network runs from the Panhandle all the way down to Key West. Our center at the bottom covers Miami-Dade County and Monroe County, the Keys. But if you're not in Miami-Dade or Monroe, don't worry, because we have other great centers around the state, as you can see, and they would definitely be happy to assist you with your disaster needs. In terms of what does SBDC do, SBDC focuses on one-on-one business consulting. So we focus on business growth, whether that's startup assistance, financial management, access to capital, as we're discussing today, international trade, marketing and growth, government contracting. We can also provide you with information, market research, market data, and then we also have specialized services and programs as well. And I'm very proud this is the great team here at FIU that provides the services to businesses in our community. It's a really great team, and we're here to help you, whether it's blue skies, whether it's gray skies, or whether we're dealing with COVID-19. So let's get into what assistance is available for COVID-19. First off, I know that we're talking about SBA disaster loans, but I'm encouraging you to explore all your capital options to make sure that you have what you need to stay afloat. So that's definitely going to include SBA disaster loans, but there's other loan programs available. One of the programs I want to highlight is if you have an existing relationship with a lender, that you should contact them regarding a current line of credit that you have or any accounts that you have with them, because interest rates have been lowered. So there might be some opportunities for you to work with an existing lender that you already have a relationship with. Also, as we're discussing SBA loans, if you have an SBA backed loan, particularly a 7A loan, there are some particular deferments of loan payments that are available if you're experiencing temporary cash flow, as a lot of folks are experiencing right now. Also, if it was sold on the secondary market, lenders can also authorize a one-time 90-day deferment without prior consent. So those are some options that you can do to look into to provide your business with some more cash flow, in addition to searching for additional capital like we're going to talk about. So without further ado, let's get into the SBA disaster program. So as noted, the SBA disaster loan program is the primary federal disaster assistance loan program for private sector non-agricultural businesses that face a disaster. And actually, the disaster loan program predates the SBA itself. The SBA was established in 1953, and actually the disaster loans were part of an earlier agency that was responding to the Depression. So what happened was they rolled the disaster loan program into the SBA when it was created. And SBA disaster loans are a little bit different than 7A 504 or some other loan programs you might be available with SBA, because SBA loans disaster loans are a direct loan from the SBA. It doesn't go through a bank. It goes through the SBA themselves. In terms of what they look for, applicants must have a good credit history that's acceptable to the SBA. They have to demonstrate the ability to repay, and they have to pledge collateral where it's available. For SBA, according to law, they can go up to a maximum of 30 years, but terms are going to be lower for businesses if you have credit elsewhere. For this particular disaster, if you have credit elsewhere, you're not eligible to receive an SBA disaster economic injury disaster loan, and we'll get into that. SBA sets the installment payment amount and the corresponding maturity based on your ability to repay. So actually there's two types of disaster loans. There's physical damage disaster loans and economic injury disaster loans. As you see the big X on the screen, I'm not going to get into physical damage loans because they're not eligible. They're not available for COVID-19, but just be aware that they're out there because, we live in Florida. We've had a lot of disasters and things like that. So I'm sure you're familiar with the physical damage loans. That's basically replacing property to pre-disaster conditions. For economic injury disaster loans, it's up to $2 million in working capital for businesses and private nonprofits that have an economic injury directly resulting from COVID-19. Loan proceeds are not intended to replace lost sales or profits or for expansion. As we noted, the loan terms and amounts are set by the SBA, and what they do is they look at your financial condition. For economic injury disaster loans, it's also very important that you know that SBA can disperse up to $25,000 without requiring collateral. So regardless of what your loan amount is, you can get $25,000 from SBA once you're approved without being required to put up collateral. In terms of collateral, SBA takes real estate as collateral when it's available, but they're not going to decline a loan for a lack of collateral. But they're going to require you to pledge what's available. And I would strongly encourage you, depending on what type of business you have, if you do have any business assets, if you have any commercial real estate, if you have anything that is directly tied to the business, SBA is strongly encouraged by Congress to try to go for business assets before they go for personal assets or real estate, such as your home, your personal home, because I know that that is a concern for some business owners when they look for disaster loans because they're for their business, because they're worried that they're going to get a loan for their business, but they're also going to have to put up their home as collateral. And I was also going to note that you can have an existing SBA disaster loan and still qualify for a COVID-19 disaster loan, but you can't consolidate the loans. But you can get both of them. You can have both of them at the same time. So in regards to SBA, there is a 3-step disaster application process. As the graphic shows you, first you're going to apply for a loan. Then they're going to do any property verification and they're going to make a loan processing decision. And then the loan is going to close and you're going to get your funds dispersed. So it's step 1, step 2, step 3. I would strongly encourage you to not miss the application deadline or to wait until the last minute to apply. A lot of businesses wait until the last minute because they're not sure kind of what their condition is, what's going on. If you think there's a reason that you should apply for the disaster loan, you should go ahead and apply now and get it submitted. Also, like as I noted up there, if you're approved, you don't have to move forward with the application if your circumstances change. And it's also important to note that you don't have to draw down the full approved amount if you don't need it. So let's say you get approved for $250,000. You can only draw down the $25,000 that you can pull without collateral, or you can basically do $100,000, $75,000. You can draw down whatever you need, and you're only going to pay interest on what is dispersed, what you draw down. You're not going to pay interest on the rest of the money that you've been approved for, but you haven't drawn. So specific to COVID-19, as I noted, they're going to provide up to $2 million in disaster loans. The loans are for economic injury caused by COVID-19. The loan proceeds, they can cover paying fixed debts, payroll, accounts receivable, other bills that can't be paid due to the pandemic. As noted, loan terms can be up to 30 years, and the interest rate for this particular disaster for small businesses is 3.75%. And when they talk about credit elsewhere, that generally means that you do have an existing line of credit with a bank, or SBA determines that based on your credit score and other information, that you should be able to get a loan reasonably on the regular market. Where you're going to apply is you're going to go to the website sba.gov/disaster. That's going to provide you with information on the program, and also you can apply online. So let's get into some of the information you need to know for applying. So this is the SBA website. This is how it looks when you get there. They're going to have 3 different options. Eligible disaster areas. If you're in Florida, you're going to qualify, so you don't need to look up that. If you go to that particular tab, you can actually look for some of the disaster-specific handouts and fact sheets and things like that that are specific to each state. So sometimes it's helpful for businesses so they can read more information. We're going to focus specifically on the Apply Online section. In terms of what SBA is going to ask for you, the basic filing requirements include a completed SBA loan application, a tax information authorization, complete copies of your most recent federal income tax return, schedule of liabilities, personal financial statement, and other information may also be requested from SBA. I mean, this is a loan, so you're going to have to pay it back. They want to make sure they get all the information to make a good decision. In terms of what they also might come back and ask you for once you submit, SBA might ask for a complete copy, including all schedules, of your most recent tax return for your principals, general partners, or your managing member and affiliates. So they might ask for information on all the folks that are affiliated with your business. If the most recent federal tax return has not been filed, SBA will ask you for a year-end profit and loss statement and a balance sheet for that particular tax year. Also, they're going to ask you for a current year-to-date profit and loss statement, and also they will look for an additional filing requirements form, which provides monthly sales figures. Just think, because for SBA, this is an economic injury disaster loan. So what they're going to want to do is look at your previous financials and then also how you're doing right now, because they're going to want to take a look and compare previous historical figures to how you're doing now. That's so that they can demonstrate that there is an economic injury, but also what they're going to do is use that to estimate how much in funding they're going to give you, because they're going to look at kind of your historical numbers and project out and see how much they think you should be provided in terms of the loan, like how much is going to help you get through the disaster. Whenever you are submitting the application, this is the page that shows you like a successful page where you've completed all the filing requirements. So you're going to see the little check. You're going to see all the checks on there and see everything, all the documents attached. So this is kind of when you have all those additional filing requirements. This is going to show you what you need to put up there. I was going to note that we heard from SBA that some folks that are sole proprietors, they're having some issues when they're doing the application. In particular, that folks that are sole proprietors are not checking the correct option when they're applying, and they're getting kicked off the disaster loan application portal. SBA checked into it, and they found that they were selecting the wrong option when they were registering. So if you're a sole proprietor, you must select the economic injury, the EIDL loan option, and you can see that at the bottom of the screen. As shown below, in order to proceed with applying for the economic injury disaster loans for COVID-19. I know that it says on there, check all that apply, but for this particular disaster, they don't have real property, they don't have business contents, they don't have military reservist economic injury. So you're going to want to keep it specific to economic injury disaster loans. And also, like I just wanted to note, if you select the wrong option, they're not going to make you re-register, but you're going to need to start the application again. So you want to pay attention to that. I'm going to give you a little bit of light at the end of the tunnel. This is what a successful application looks like. So once you submit your application, you're going to get a little box. You're going to get basically the screen that's going to say application submission confirmation. You're going to get an application number. Make sure you write that down. Make sure you retain all that information for your records. You're also going to get a little message from SBA that's going to note, like it is at the bottom, where it gives you an update that says that you're submitted it successfully, that they're confirming that you submitted it. So that just shows you how it's going to look when you do everything successfully. And I know that you're going to do it successfully because you're listening to this webinar, so you're getting really good information. In terms of how to get a head start, a lot of times, people don't like to go online and just apply right there. What they like to do is do a little bit of homework. So if you're one of those people, and I strongly encourage you to be that person, be that guy, an easy way to get prepared is to go to the SBA website and get electronic versions of the paper forms. It's all those forms that I showed you in the other slide, all the different forms and things like that. They can be accessed at the link that's on the slide. The reason you want to do that is you can use that as a checklist so that you can prepare all the documents you're going to need to submit once you're online. This is going to help you cut down the amount of time that you're spending applying, because you're not going to have to go save, log out, go get documents, scan them. You can basically see everything that you would need, and then you can have it ready and have it on your desktop. And if you have any questions when you're applying, you can call the customer service center at the number that's provided, or you can email them at the email address that's provided up there as well. But I would encourage you kind of get that paper forms and use that as a checklist, because that'll help you to prepare the application. In terms of some frequently asked questions, if you're in Florida, if you're in some other states, you've dealt with SBA before and you kind of had some common questions. So this is some common questions that we typically get when folks are applying for SBA loans or when they're in the application process. First off, what are some of the typical issues that result in a decline? As we noted, the most common reason is lack of repayment ability, that you don't have sufficient cash flow to support the current debt that you have or adding any additional debt. They also could look at your credit history, and if you have some red flags in there or some issues, that could be a factor. Definitely for SBA, because it is a federal government agency. If you have any federal loans, student loans, and things that you haven't paid or you've had issues with, or any IRS issues, those are going to be issues that they're going to factor in. If there are any issues that you have that you can be explained away, whether it's a divorce, whether it's medical issues, things like that, anything that's requires some additional information, I would encourage you to do a write-up, provide additional information, because those are things that SBA could consider. Another question that we get is, if an applicant is declined for a disaster loan, is that it? Are you done? Or do you have an opportunity to appeal? And the answer, thankfully, is that yes, you do have up to 6 months from the date of the decline letter to seek a reconsideration of SBA's initial decline decision. I'm going to strongly encourage you, though, when you get that letter from SBA, pay attention to the date that's on the letter. That is when the clock is ticking. It is 6 months from that date of the letter to basically get in your decline. And there's a lot of groups such as SBDC or other groups in the community that we can help you with an appeal of that decline decision. Sometimes it's just a matter of getting them updated financials. Maybe it's something in your application that you didn't include. But there's also a second bite at the apple. There is a second opportunity to appeal the second decline decision. So you basically can apply, get declined, you can appeal, and then if they decline you on that, you have one other chance. But it's not going to give you 6 months. It's a lot shorter than that, so you're going to want to pay attention to the timeline on that. But you do have 2 opportunities to appeal and try to move forward with the application. Also, as I answered earlier, are borrowers required to pay interest on the entire approved SBA disaster loan amount, or just the portion has been dispersed? So you guys have been paying very good attention, so I don't even need to answer this question. You guys know that it's simple interest loans, so it's calculated on whatever the principal of the dispersed loan amount. So whatever you pull down, that's what you're going to pay interest on, not something that you're approved for but you haven't been dispersed. And then another common question that we get is, everybody's circumstances change. Sometimes you apply and you get approved for a certain amount. Sometimes you get approved and you need less money. So if you need more funds Don't be shy with SBA. You can go back and you can submit supporting documentation and request an increase. You can also request a loan reduction if you need less funds. And pretty much for a loan increase, what you can do is you can write a letter to SBA and then just provide additional documentation. And again, that's something that groups like SBDC or other groups in the community, other SBA resource partners or other groups, they can also help you with that request as well. It's a pretty standard request, and it's something that you just need to provide supporting documentation and back up what you're doing. And a lot of times too, for SBA economic injury disaster loans, if you get approved and there's a long delay between when you get approved and between when you get your first disbursement. Sometimes that can happen for a lot of reasons. That is a key time to request a loan increase because you would have additional economic injury while you're waiting between the approval and the disbursement. And so I would encourage you, particularly for this disaster, if there is a delay between your approval and your disbursement, and it's a good amount of time, you're going to want to request additional funding, and SBA will review that request along with your supporting documentation. So that's it. As I mentioned, we're here, SBDC is here to help you out if you need any assistance with SBA disaster loans or any other type of assistance related to business impacts from COVID-19. I just want to thank you again for your time. I hope this information was helpful, and definitely stay tuned because we're going to have some additional webinars focused on additional programs and additional resources that are available to businesses. Thank you again, and take care.